Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. Hope all you had a wonderful weekend, enjoyed the Super Bowl. This is February 6th. We don't have any economic news releases scheduled for today. Actually, this will be a very light week for economic news releases. So much of our discussion will be based on headline news coming up, and we'll jump over there right now. Currently, the stock market is down right now. And a lot of that has to do with Greece kind of struggling with agreement over spending cuts to ensure another round of rescue funds. So, of course, Sarkozy and Merkel are kind of encouraging them to get this done before they can receive their rescue funds in March. But as nothing is imminent and nothing has been done as of yet. No agreement has been accomplished yet. So, because we don't really have a lot of economic news releases scheduled for this week, the markets will be kind of tuning around to what's happening around globally to make decisions on where the stock market, and of course, that affects the bond market, as we'll see here, where things go. So this is a big thing right here. And then also this week we'll be seeing a lot of the global central banks will be making having announcements around the world. So we'll have people like the Bank of England and European Central Bank will be two that will be having some announcements this week. So they'll be staying attuned to what they're saying. And also today I saw an item here, IMF is cutting China's production for 2012 to 8.25. So it's in the 9% range right now. They do feel it's going to be dropped down to about 8.25 this year. So that's obviously a slowdown for them. Now, there's an interesting article on 24/7 Wall Street that you can find the article off of the Market Watch, where I kind of like to go, and talk to that could actually, even though they have a lot of a buffer, China's really being tied towards the EU, in the sense that that if they falter, this could really have a major impact on China's productivity, and it could drop another maybe as much as 4% from that slowdown in their economy because of that, how much they're tied in with the European community. And this could be very important, even though they have enough in reserves for a buffer, but it may not be enough to really of what could really potentially happen over in Europe if everything kind of blows up, as as we haven't seen any safety net yet that has been developed. So, and a lot of it's being blamed on that there's a lot of countries over there that just they don't really have the productivity over there. There's no manufacturing and such that can really compete on the global level. The only thing they can maybe compete a little bit might be on the tourism, which obviously tourism down, so it's difficult to compete with the major countries out there. So that's like a country like Greece, for example. So that's where some of the issues this article is kind of lying or mentioning in here. So great article. If you have a chance, check it out. And so we'll jump over to the bond market and see what's happening over there, where interest rates are moving. So we had a big drop, as you can see, with the red mark on Friday, and even pulled up a little bit. We hit the floor last week, which was actually a new floor. But we still didn't go down further enough to really close that gap that happened a few weeks ago, which was that Thursday, that Friday. As you can see, the red arrow kind of pointing that what didn't go down enough to kind of close that gap yet. So I'd be careful here. It still could be choppy. Some of these economic news some of these global news that come out could potentially, hurt the bonds. Maybe something happens where Greece comes to agreement and they rally, and the bond market comes down. So this could be pretty volatile this week. That again, I'm still looking for that to close. So be cautious. But right now, rates are improving a little bit from Friday, even though they're down from Thursday's high of last week. As you can see, it was way up there above the 104 mark. So just be cautious here, and but rates are a little bit better versus Friday's numbers. Still down from Thursday, obviously, as you can see. So you guys have a wonderful day, and if you guys are on the site, please subscribe.